right. Well, thank you. Thank you, Crystal, and welcome everyone to today's presentation. Once again, thank you to American Heritage Credit Union for their partnership, and welcome everyone to today's presentation, Managing Credit. So, if you are already a consumer who is using credit, here we're going to show you how to continue to use it, but the right way. With that, I also would like to tell you a little bit about the agency that I represent, Money Management International. We are a full service national nonprofit financial education, and we also offer counseling. Our mission is to improve life through financial education. We provide a variety of services. One of those is offering education, and we partner with organizations such as the credit union, as the American Heritage Credit Union. But we also offer we have a free online learning program that at the end of the presentation, you will be able to see our link. It is free of charge. It has several topics, it's very interactive, and it has resources and handouts and a lot of exercises. Other program and services that we provide budget and credit counseling, which is 24 hours a day, 7 days a week, free of charge, free of charge. And with that, we also, because of the partnership with the American Heritage Credit Union, we have a dedicated phone number for all the members and non-members of the credit union. Again, available 24 hours a day, 7 days a week, free of charge, free of charge. Other services, we are one of the largest HUD-approved agencies in the country. HUD stands for the U.S. Department of Housing and Urban Development. So we provide all kinds of counseling and education when it comes to housing. We also provide the debt management programs, pre-bankruptcy counseling and education, student loan counseling, credit report reviews, post excuse me, post-disaster recovery counseling, and we also have in some of the states in the United States, we have a new program called Debt Resolution Program, DRP. So lots of information, lots of great resources. At the end of the presentation, you will be able to see our website, phone number, the free online learning program, and the phone number, the dedicated phone line for all the members and non-members of the credit union. And then I know Crystal at the end of the presentation will also give you lots of resources that the credit union has for all of you. So again, welcome. Welcome to today's presentation. So these are today's workshop's objective. I'm going to be talking about credit, but specifically, we are going to show you how to calculate the cost of credit. And I am also going to tell you when to use credit or save and pay in cash. I will also identify best practices for using credit. How are you able to examine a credit card statement? Identify predatory lending practices and the costly consequences of obtaining these types of loan. So at the same time, I'm going to give you some alternative that you are able to use rather than using predatory lending. And at the end, I'm going to be giving you some, how are you able when you are trying to establish credit by applying for credit card. I'm going to give you a form. There is a form that you will also receive. You are going to receive a handout with all this information where you're able to compare. You're able to see, you're able to compare apples to apples to get the credit cards for the best value. So lots of great information. So let's go ahead and start. So what is credit? What is credit? Um, and one of the questions out there that I would like to give you is how many of you have experience with using credit? How many of you use credit regularly? How do you feel? How do you feel about using credit? I invite all of you to make comments and to ask questions by using the chat area. So at the end of the presentation, we'll be able just to go over some of your comments and some of the questions, some of the answers for these questions. So do you have experience using credit? How do you feel about using credit card? What is credit? What is credit? So credit, and just ensure credit is using someone else's money. Okay, so we are able to make purchases. Usually that someone else person, that someone else that we're using that credit is either a bank, a financial institution, or a retail store. But a lot of times could be a finance company or another type of lender. Now, the use of credit has a cost. The use of credit has a cost. And these lenders, the financial institutions, charge us interest, and that is the cost of using credit. One important thing to understand about using credit is that, again, credit is an advance loan. Okay, credit is an advance loan, is a way that we're able to purchase things without paying by cash. It is a way for us to purchase something now and be able to pay it later. And a lot of times, consumers use credit when they're purchasing large items. So they're able, like electronics and things like that, or when they're making online purchases, because by using credit, we are protected. We have some laws that we are able to be protected when using credit, and rather than using cash or debit. Okay, and we'll go over all those laws at the very end. Okay. All right, so let's continue with the definition. There are two types of credit. We have one is called installment loans, and the other one is revolving credit. Excuse me. Installment credit includes a set of contract payment amounts and terms. So in other words, is a set amount that they are giving us, and then we have a certain time that we have to, certain length of time that we need to pay that loan. Usually, examples of installment loans include automobile loans and home loans, okay? And sometimes some personal loans that we are able to get. The bank or the financial institution who is giving us that installment loan set contract payment amounts and terms. So when the terms are met, and consumer finish that loan, then the contract ends between the consumer and the financial institution. Okay. Revolving credit has a credit limit, and as items or goods are charged, then the amount available on that line of credit is reduced. And as payments are made, then the amount, the line of credit available to use is increased. Credit cards is one of the good example for this type of credit, revolving credit. So because we have a credit card with a Visa or MasterCard, so they allow us to have a set amount available. Let's see, $1,000. So we go use that card. We charge 300, then we pay we charge 300, so the line of credit gets reduced to 700. Once we pay that balance, then the line of credit becomes whole again to 1,000. Okay. So let's take a look at a closer look at credit, the cost of using credit. So here we have a young consumer, a consumer, and this is John. And John needed to buy some clothing. The department store approved him for a credit card from the store. So he approved his credit application, and he made a $300 a purchase. Okay, so he made a purchase, and the balance to pay or he charged was $300. The store credit has an annual percentage rate of 18%. 18%. Okay. And usually, credit cards ask the consumer to pay the minimum payment, which is usually between 2 and 3% of the balance. Okay. So this is what the banks usually ask the consumers to pay to have the account in good standing. Okay. So here's an example. So he has a $300 balance. His monthly payment amount is $15. So how much of the first payment is going to pay the balance and how much will go to interest? Well, to answer this question, we're going to calculate the monthly periodic rate. In this case is 18%. So 18% divided in 12 is 1.5 percent monthly interest. So now we can use this monthly periodic rate to calculate the monthly interest charge. Multiply balance by monthly periodic rate to get your monthly interest, So let's take a little bit more close to the cost of credit. Okay. So here it is. So if the young person here only pays the minimum payment every month, it will take him 24 months to pay off the debt. That adds up to 2 years to pay a $300 purchase, He will pay $59.36 in interest, and the total cost of his clothing will end up being $359.36. So even if he purchased all those clothing on a special and clearance and he had coupons, at the end he will probably not ended up saving anything because he ended up paying $59.36 in interest. And this is if he does not add any charges to that credit card that he already have $300 balance. Okay. All right. So very important to understand the cost of using credit card, the cost of interest, the cost of interest. So yes, it is good to have credit. It is important to use credit because credit will serve as a referral, as a like a resume, but we need to make sure we're using it the right the right way. Okay. All right. So yes, it is. There it is. It will take him 24 months to pay the debt, and he will end up paying 59.36 in interest. All right. So let's see. Uh, and here, do we buy or we don't buy, or do we charge it? So he's also needing to buy a new phone. He's also needing to buy a new phone. So in this scenario, is he gonna buy it or don't buy it or charge it? Okay, so with all the latest, he wants a new phone with all the latest tools and features. The phone is gonna cost him $1,000. The store where he is looking at the phone is offering him $150 off if he buys it today. Okay, so if he buys it today, they are going to give him $150 off. Okay. He also has some other expenses. John lives by himself, so he has rent and utilities, and he only has looking at his budget, he look at his budget, and he only has $200 extra to spend. Okay. But he also got a new credit card, and the credit card limit is $1,500. Okay. So here is my other question out there for all of you by looking at all these terms. What do you think John should do? What do you think he will do? Will he buy it? He will not buy it? Or will he charge it? Okay. So let's take a look. Okay. So each time we want to buy something, uh, a lot of times the choices that we ended up or the answers that we ended up getting is buy it. Okay, buy it or don't buy it or charge it. So it is important to ask ourselves some key questions, okay, when we are in this type of situation, so it can help us make the wise choice. Okay, is it actually needed? It is it something that we really really needed? What are some other alternatives rather than charge or buy a $1,000 phone? What is my budget situation? What is my financial situation? Okay. Um, what are the advantage or disadvantages of charging the item on my credit card? Okay. So, in this scenario, in this situation of the new phone, um, some questions that John, the young fellow here, should ask himself um, is just what I said. Is it a need? Is it an impulse buy? Um, and since he already have a phone, will this be a want or need? Will he need all these upgraded options that he is going to be getting rather than, continue to use his old phone? Can he buy a less expensive phone? Now, if he walks away and thinks about it, he probably will not feel the same later on. Okay. Maybe it will be better just to save some money, and he will end up probably charging half of what it costs, or maybe paying cash. The main thing here is that it is very important to look at the budget to make sure that those payments fit into that financial spending plan, that it fits into that budget. okay? Um, and then the main thing here is, what is the interest? If I don't pay that charge, that phone, and I'm only paying the minimum payment, how much that phone will end up costing me? Okay, they're only giving me, $100, $150 off. But how much will end up costing me if I only pay the minimum payment with 18% interest? Okay, so again, by answering all these questions honestly on each purchase that we're ready to make, it will help us to make good credit decisions. Okay, we are using credit wisely as a tool. It's very important always to think first, buy later. If and when you decide to charge a purchase, it is very important to look at the creditor statement carefully, okay? Just to make sure what is the interest rate, how long it's going to take us to pay it. But again, very important to make sure that we're planned to make a purchase of that magnitude, that we're not just acting by impulse. Okay, so let's take a look at the creditor statement. This statement represents a regular, a general revolving credit card account, credit account, revolving credit account. Now, please, this is just an example. They look kind of similar, but not all the statements look alike. But they have to contain the same information. There is a law. There is a law that was enacted back in 2011. There was an act that was enacted back in 2011, and it is called the CARD Act, CARD. That stands for the Card Accountability, Responsibility, and Disclosure Act. Okay. And this act requires all creditors to make certain disclosures on every statement, on every credit card statement. Okay. So let's take a look at each section, okay, of the creditor statement. All right. So here is what is called the activity summary. And here it lists all the activities that have taken place since the last statement closing date. Okay. So, and here you're able to see that the previous balance was 2,812, 2 cents. How much interest was charged? There it is. To that account, 43.46. So the new balance, it always add up. It always add up. Now the new balance is $2,843.84. Available credit. There is also a line in there that it says available credit. So what exactly is the available credit? This is the difference between the credit limit and the amount already charged, the amount already that we owe. Okay. And this is very important because if you have taken one of my classes on credit report, credit score, 30% of your score is utilization. Utilization. That is the difference between how much is charged, how much we owe versus the line of credit. So this is very important. Closing day. Closing day is the cutoff day for calculating interest on the balance. Okay. And billing cycle. Billing cycle is the number of days that I have paid interest in this specific billing period. Okay, so this is very important that we always, and nowadays, a lot of us don't receive these statements in the mail any longer. So we just get this email message and it say, your statement is ready to look up. Here is your next payment. Your next payment is due such and such day, and your balance is this. Okay, and your minimum payment is this. So a lot of times we just go in the account and then we just pay. We need to take the time every month to look at all these statements to see how much money, if the payment has been applied, what's the interest rate, any new notations, any new information. So it's very, very important. Then the next one is payment information. So in here, it is just telling us our payment, how the payment was applied. So when is and how it's going to be applied, and when do we need to pay? So what is the payment due amount? It says there minimum payment due, and here is 2% of that 2% of that balance, so 85.28. Payment due, the date of the payment due. So it is very important that the payment needs to be mailed or paid online earlier so it can be posted by the due date. Okay. I always advise people to pay at least 5 to 7 days before its due date, because you never know. You never know. If you mail now is very slow. You say, okay, well, I'm going to pay my credit card today, but it's due tomorrow, and something happened with the program or the system. So it is very important to always look at your calendar, set up a date 5 to 7 working days before its due date, because your payment needs to post by the due date to avoid any penalties. What happened if the payment arrive later, or if it's posted later? Then there is a late fee charges. Late fee charges. Usually late fee charges are around $25. Okay, in this case, it has to tell you there is a statement and there is a late payment warning. So if we do not receive your payment, we're going to charge you $25. And this is part of that credit card act, is that now the creditor has to tell you how much you will be charged. Some cases you will be charged 25, other 35, 30, whatever. But they have to tell you, okay? Now, also, there is going to be, and this is one of the nuance, and I keep asking some of my participants in my class, have you seen this statement in your credit card? And they say, no, I usually don't read, I just see how much I owe and I pay it. Well, this is part of that credit card act, and that is that notification about the minimum payment warning. The minimum payment warning. So it has to really tell you, and it spells it out. So if you pay only the minimum payment and never charge anything, that's the problem here, is that we continue to use the card. How long will it take to pay off the balance? In this case, it's telling this consumer that it's going to take him, well, we're talking about John, it's going to take him 16 years to pay off. Okay. He will have paid a total over that amount, $5,836. Okay. So the total from the balance from 28, it jumped to 28. I'm sorry, 5836. But also the credit card company also have to give the consumers some alternative. And in here is going to say, okay, all right, we already told you. So you only pay the minimum payment. It's going to take you 16 years, and you ended up paying a total of, and that includes the purchases plus the interest. But if you pay a little bit more, it's only going to take you this many years. So in this case, if you pay 107, it's going to take you only 3 years to pay it off, and you will be able to save this YZ amount. So next time you look at your credit card statements, please, or if you have them handy, look in your accounts and see all of this notification. And this is because of the 2011 new act called the CARD Act. The CARD Act is Card Accountability, Responsibility, and Disclosure Act. Let's take a look at the transaction summary. And this, again, is part of your homework. You need to make sure that that the transactions that you made are the correct one. Okay, are the correct ones. You also are able to see in the transaction summary how much is the interest that they are charging you, the billing cycle days, the purchases that you made, the dates of those purchases, and the merchant. And it is very important for you to check that to avoid any mistakes, to avoid identity theft, okay, or someone hacking into your account or using your credit card, not, using your credit card to charge extra. So very, very important. So in here, interest paid on purchases is 20%. A lot of the credit cards also have cash advance. They usually charge more, it's 25%. So all of that information has to be disclosed, all of that, okay? Now, when we purchase something and there is a mistake, or someone is using like double charge, or someone is using the credit card or something, if we need to dispute something on the credit card, we have more rights, and that is the billing. At the end, you're able to see a complete list of all the of all the acts, and it's the billing act, credit billing act, that allows consumers to have 60 days to do any chargeback. We tell the company, the company, hey, there is a mistake here. They ask you to fill out some paperwork, and they're going to take that information, that charge off of your credit card while the investigation. 60 days they have to investigate any wrongful charges. All right. Okay. So everybody has a homework. Everybody has to check, make sure that you really read your credit card statements every month. Let's talk about predatory lending. This is a practice of charging extremely high interest rates and fees for loans. Predatory lenders prey on the desperate. Yes. They're also prey on uninformed borrower. Okay. Some people feel they have no choice. Some consumers feel that they have no choice but use this type of lenders. But it is not a good situation. It's not a good situation. Okay, so let me give you an example here. Um, so this is the same person. He needs to buy a computer. He is purchasing a computer that is going to cost him a laptop. It is going to cost him $800, and has signed a rent-to-own agreement. A rent-to-own agreement. And believe it or not, there are still a lot of those stores out there. He has agreed to pay 65 weekly payments. And these 65 weekly payments, because of his budget, he said he's able to do. And they're $32.99. Okay, so let's take a look in here. More detail. This is the cost of rent versus, cost to own. So with fees and interest, he is going to end up paying a lot more. So in here, he is going to ended up total of all payments, the $800 computer is going to ended up costing him $22,144.35. So this young person ended up paying 2 times 68 times more than the original amount. 2 times 68 times more than the original amount. Okay. Um, so yes, and this is for everything. You know, a lot of times people will buy computers, flat TVs, washer and dryer, sofas, etc. Okay. But because they charge a very high interest rate, very high interest rate. So it just represents this charge in here represents actual cost from a national, you know, company, a rent to own. So the 90-day same at cash price represents the rental center's cash price. So comparing that to the available price on the same product available in a regular retail store. So it's just, you know, a good representation. So the total rental payments can be between 2 times to 5 times more of what the retail price of the product. So a rent to own agreement is one of the most expensive credit typically used around the consumers. As you can see, predatory lenders take advantage of these borrowers, okay, because they are able to just to pay the minimum. So again, asking those questions. Do I really need it? Is it a need or a want? What alternative do I have? What alternative can I use rather than getting too much expense here? Okay. Maybe delaying the charge. All right. Payday loans. And these are payday loans. That's another common predatory lending practice. Payday lenders hold a borrower post-dated check or require an approval to automatically withdraw the money from the borrower's bank account on the next payday. With most traditional loans, you pay the principal and interest down in regular installment. Okay, that's just with the general traditional loans. But with a payday loan, the borrower must pay off the whole loan on the next day, on the next payday. Okay, and a lot of times that is impossible. A lot of times that is impossible. So people repeatedly pay the fees with nothing going into the principal. And many of these loans are set up to make it difficult to pay off the whole loan, even if the borrower, the consumer, wants to pay. Payday loans typically consist on high interest rates. Okay. They also have short minimum loan terms, payment due at the end of the term, rollover loans. They also have vicious debt cycle. They have no consideration on the borrower's ability to repay. They accept post-dated checks. And they have a lot of mandatory arbitration clause. So be careful, please be careful selecting a lender when you need a loan, whether it is for a personal loan, a car loan, or even buying a home, okay? Maybe making repairs, maybe to pay off credit card debt. Some lenders do not have your best interest in mind. They want benefit from your needs. So These predatory lenders typically offer loans with high interest rate, high fees. So the cost of doing business with these lenders is high, is very high. Okay. Um, Please do not use any of this type. Now, a lot of times I get this question, why do they assist? Yes, they assist because there is a need for that. There's a consumers who really need something like that, but we try to tell them not to get into any of those businesses. Pawn shop, that's another one. Pawn shop loans are typically very short term. In most cases, you will get only 30 days to pay off the loan. So if you need to, you can usually get an extension as long as you keep paying the interest on the loan. Again, a very expensive proposition. Very expensive proposition. Car title loans, car title loans. Car title loan is a secure loan based on a percentage of the value of your car. So the car is used as security for the loan. Usually the loan requires upfront fees. The borrower, the consumer, signs over the title to the lending company until the loan is repaid. Of course, high rates of interest, high fees. Okay. So these loans usually have a similar, they are very similar in structure to any of the other predatory loans that I just mentioned, Okay. All right. So very important. The Federal Trade Commission, the FTC.gov, has a very good article about all these predatory lenders, what to do, um, how do they work, and how to calculate their costs. There are several alternatives to predatory lending loans, including a small loan from your bank or credit union. Very important to have a relationship with the bank, a relationship with a credit union. You may be also able to borrow from a family member or a friend. There are a lot of employers today. There are quite a bit out there that they're able to give you a payday advance. Um, uh, Also, you saw some of the statements that a lot of the credit cards give you a cash advance, but they usually charge a very high interest rate. So you have to be very careful on that. So the main thing is just look at all the alternative rather than using any of those businesses that have, that they are under the predatory lending area. Okay. So be careful, be careful. All right. So if you have an emergency, such as maybe a car emergency or a dental emergency, um, or any other type of emergency, and you have exhausted the alternative to predatory lending, um, there are some good options out there. Um, you know, uh, the main thing is not to go to any of this predatory lenders areas out there. Um, just try to use a personal loan, a family member, but please, please, it's also important to look at your budget, look at your financial spending plan, and set a saving goal for an emergency fund. And that way we're able to avoid all of those options, all of those, areas where we can get some cash. So very important to set up an emergency savings loan. You can always put it in a high yield saving account, or you can just put it in a different account, not where you keep your money to pay your bills, different account. So you just forget that you have it there. Okay. Here are some ways oops, sorry. Here are some ways to manage credit wisely. You need to compare shopping for the best loan. You want to also think about the annual percentage rate, the loan of the length, the monthly payment. Always stay away from loans offered initiated by the lender. Avoid lenders who promise you can get a loan regardless. So be careful. If you have good credit, you're gonna get a loan. Okay. Um, if you have so-so credit, try to see any other alternative, credit union or a personal bank account. Do not be influenced. Do not be influenced by high pressure sale tactics. Only borrow the amount that you need, okay? And understand exactly how much the entire loan will cost you. Do not agree to anything that you're not sure. Uh, don't be in a rush to sign anything. Make sure that you read and you understand all that contract. Okay. Here is a credit card comparison, and you will have that in your handout. Having an idea of the cost of credit and how to manage credit wisely, you are in a better position to shop around. Okay, you're able to review loans, you're able to review the cost of using credit. And here you're able to check all of that. There is a great website out there called bankrate.com. You also will have that in your handout. Bankrate.com is a great place to go to review different loans, different financial products, not only loans, but bank accounts, saving accounts, high yield saving accounts, personal loans, home equity line of credit. So you're able just to search for the product and you're able to compare right there on that website. Okay. So please be careful. Be careful and how to manage credit wisely. Remember again, using credit when we charge something on a credit card is a loan, it's an anticipated loan. We have a responsibility to pay off that loan. It is important to look at our budget before we charge, before we use that credit card to go and buy a new dress or a new pair of shoes or go out for dinner. We need to make sure that that amount is already assigned in our budget, that expense is assigned in our budget. So when the bill comes, when the statement comes, we're able to pay completely the entire balance on our credit card. And that way, we are avoiding to pay interest, okay? And the example that I gave you here is 18%, but according to bankrate.com, the average interest rate in today's credit card is around 23, 24%. Store credit has a very high interest. I think it's over 30, 31%, but you can get more information on their bankrate.com to get more information on that. They have great information. So, but if you are thinking about making a large purchase, let's say you need a laptop for work or for school, then have a plan. Have a plan. Okay, it's going to cost me $800 or $500 or $600. Okay, I'm not able to pay $100 every month, but okay, and how many months I'm able to pay it off? Maybe 3, 4 months. So you know already how much interest you're going to end up paying in those 2 or 3 or 4 months that you're carrying that balance. Okay, so very important to have a plan. And if you're charging something that is going to take you longer to pay, then please do not use that credit card. Do not charge anything extra on that credit card. Okay. All right. Lots of great information. So I have covered lots. You're going to be receiving the handouts. You're going to be receiving the handouts so you're able to review that information. So we talk about, I mentioned how to calculate the cost of credit. Um, I also show you when to use credit or save and pay by cash. Um, I give you some best practices for using credit, the importance of checking your credit card statements every month, how to avoid predatory lending practices, um, and you may have some extra, you know, businesses out there where you live, and also the importance of you to compare, not only comparing credit cards, you're also able to compare any type of loan. If you are ready to buy a vehicle, if you're in a need to apply for a car loan, compare. Okay, don't let anyone run your credit. Just ask them, okay, more or less, if I have a credit score and this is the how much would you be able to give me a loan? Go to your credit union, okay, and you be able to compare to, personal loans, car loans, credit card loans. Always compare for the best value. Okay. All right. Today's presentation is designed for educational purposes only and should not be construed as an investment, tax, or legal advice. Just remember to go always with a professional. Okay, so here is our website, moneymanagement.org. There is our online learning program free of charge, and there is our dedicated phone line for all the members and non-members of the credit union. It is free of charge. We have counselors. All our counselors are certified by the National Foundation for Credit Counseling. And if you're in need of housing counseling, we are HUD approved, certified HUD approved counseling. All right. Okay.